Hey, Steve Saretsky here. As always, this is a Canadian real estate market update with a particular focus on Vancouver. If you're getting sort of value or entertainment out of these videos, all I ask that you hit thumbs up and subscribe. Questions, comments, put those below. I'm going to keep this video a little bit shorter this week, and then next week we'll probably do a deep dive into sort of the national housing market, other sub areas that I'm keeping an eye on. Obviously, as we know, each market is local, but certainly credit markets and the economy is not necessarily local. Things that influence the Canadian housing market and the Canadian economy really happen actually outside of Canada. So I think it's obviously always important to keep into consideration. But a couple of things that I just wanted to touch on this week. Just found it interesting. First off, Steve Eisman, if you've watched The Big Short, actually one of my favorite movies, seen that half a dozen times probably. Steve Eisman plays Steve Carell in The Big Short. So he came out in the media presence basically saying that he's short Canadian banks. Obviously, he made that call back in 2013, basically suggesting that the Canadian credit cycle looked fatigued and ready to roll over. Timing's off, obviously, but and people give him flack for that, and probably rightfully so. But the thing that I find interesting is people give this guy like a ton of shit, and he's arguably has to be one of the smarter people out there. Obviously, made hundreds of millions of dollars shorting U.S. subprime. So this is a guy that probably knows the Canadian banks arguably better than the Canadian banks know themselves. So his certain rationale, if you watch his interview, is basically only a moderation of the credit cycle would create some obvious distortions in Canadian banks in terms of profitability, etc. And that's really been sort of my thesis as well. It's not so much you're negative or pessimistic on the actual housing market. I think the problems really lie, as I've talked about this, in Canadian credit. It's really just you have a large credit buildup in the household sector, which needs to deleverage. Not if, it's just a matter of when. And obviously that's been prolonged through lower interest rates. But I think, again, we're kind of reaching a situation where you've pretty much hit those zero lower bound. You brought rates down previously to 0.5%. We've now got them up to 1.75%. BOC, Bank of Canada looks pretty much done from here. Next recession, what do they fight it with? They'll cut rates, obviously, but you're going to be cutting rates from 1.75. Even if you get them down to zero, there's really not much room there for stimulation, and that's really impacts Canadians' ability to weather their debt payments, because you're not really able to lower their debt service ratio really any lower because interest rates have basically hit zero. So that's basically the thesis, if you can understand that in simple terms. But I think one of the things that I'm basically this is going to be the premise of the video, is essentially focusing on the development community. There's recently an article came out, and it was on the media, basically, that some of the developers are becoming a little bit more desperate. You're seeing bigger bonuses, incentives at pre-sales, and I think the scary thing for me is personally speaking with a lot of developers, and I do have certainly a lot of respect for the success that they have some of these guys have achieved over the number of years, but I think it's also important to some of these guys get mixed up in confusing a bull market for brains. Never confuse brains for a bull market. And this is the quote, goes something along those lines. Is basically, if you're a real estate developer, even if you've been a developer in Vancouver or really Toronto for the last 20 years, all you have seen is virtually a clear straight run up in home price. It's actually been longer than a 20-year bull market, but for simplicity's sake, let's basically say it's basically been a 20-year runway up, where all you've had in that time frame is little very minor hiccups in the housing and construction sector. So you had small liquidity squeeze in 2008. You basically had an 8 or 9 month liquidity drain in Vancouver, where it was extremely painful for about 8 or 9 months. But if you were able to stomach that very sharp, sudden down movement, it was fine. It was a short 8-month correction. Similar thing in 2012, you had about a 6-month correction, and then it was back up again. So we haven't really gone through anything prolonged. And so, people say, whoa, you seen '08? Like, whoa, like, things are really coming down. Everyone was scared. People were selling at losses. And realistically, the prices only dropped about 15%. But it's like, if you want to talk about a housing downturn, if you call that a housing downturn, ask U.S. home builders how they felt. Ask, a home builder in Spain or Ireland, what a real housing downturn looks like. So I think that, unfortunately, 2008 created this, false safety net, where my concern is that developers don't generally understand why we came out of that so easily in 2008. They don't necessarily understand why home prices have been rising exponentially for the last 20 years. And sort of just where we are in this cycle, comparing what's happening right now to the last slowdown in 2013, they are completely different macro environments, and a complete regime shift in policies as well. So we're just looking at things that I'm going to be keeping an eye on here moving forward. And honestly, if I was a seasoned developer, I would actually be looking at this and like licking my chops and saying, oh my gosh, like my competition is about to get wiped out. This is a tremendous opportunity to get liquid and to buy up a lot of these guys that are going to go through distressed, and housing starts are going to drop off precipitously this year. We're already seeing that in the single family housing market. If you look just at the value of building permits, you can clearly see that peaked out in 2016, and ever since then, that basically coincides with the top of the detached housing market. Ever since then, the building permits have been falling off considerably, and they will continue to do so, because obviously, you're not going to build a single family house today on spec, trying to find an end buyer when it's finished. To me, that is essentially financial suicide to try to do that in this environment. So you're really just better off waiting for these guys, and you're starting to see that is people are selling their houses mid-construction right now, because they are, especially for smaller single-family builders, a lot of these guys are not well financed. A lot of them are using the private lending channel at higher interest rates, 10, 12, 15% interest rates, where they can't weather these kind of storms. And really, it's been a weak detached housing market for the last 2 years now. So certainly a very prolonged downturn in that segment that we're not used to. But same thing going into the pre-sale market. You're starting to see a little bit of distress there. I wouldn't say not much, but the problem really lies is people that bought pre-sales from 2017 onwards at inflated costs that are going to be completing in the next 1 to 2 years, that won't have the ability to close on them, won't have the ability to flip them because it's in the liquid housing market. And so that's where I think it starts to create problems. And we're already starting to see, all you have to do is look at the number of assignment listings in Greater Vancouver and the Fraser Valley for pre-sales. The number of assignments is at record highs. This is basically new listings on a monthly basis. We haven't, again, look at the peaks. You can see the last boom where people basically tried to get out and flip these contracts was in 2007, 2008, and we're seeing similar spikes today. So certainly from an investor standpoint, I think there's going to be people that are going to need to exit these pre-sales assignments at substantial discounts, and that could be a potential opportunity for people that have the money on the sidelines there. So that's basically what I'm looking for in this market, and I want to keep this video basically short and concise. For me, I continue, when people ask me vulnerabilities in this housing market, I think it's the mindset and the mentality of real estate developers, basically not seeing, in my opinion, more red flags than they probably should. I think that you have a record number of new units under construction that are all coming to market, and that market is highly speculative. It is dependent on rising home prices, which I don't think we're going to be seeing in the next couple years. So very interesting to see how that shapes up, and then next week we'll get back to a little bit more macro stuff. But anyways, that's all I got for this week. Hope that helped. Otherwise, see ya next week.